Hello, good afternoon. You're watching Market Fatafat on ET now with me, Vinay Motiwala. Along with me is Cheryl D'Souza as well. Cheryl, a very good afternoon to you as well. Seems like a bit of a Monday blue at least, given that the geopolitical tensions are building in. Even the Indian markets have not been managed to, actually move on to that green side. We've been holding on to those levels for a while.
Absolutely, a very good afternoon to you, Vinny. Monday blues, yes, it was quite a sharper cut when we opened up the trade. We did see some sort of a recovery creep in. Primarily, the recovery has been major when you talk about the broader markets. The mid-cap and the small-cap index have seen healthy set of recovery from the day's lowest point, and they are holding on to those levels as of now, as you can see it on your screen. Mid-cap index, no doubt, seeing a cut about in excess of 1%, but yes, not as bad as it started for the day. Small-cap index also has seen good set of a recovery from the day's lowest point. Nifty Bank, that's the one that's not moved that much, while the other segments actually saw some sort of a recovery, but you didn't see Nifty Bank actually budge at all. In fact, now near the day's lowest point. Take a look at metal index. It hit an intraday record high level in today's trading session. So metal index leading the recovery for the markets. Now it's actually slipped into the negative territory, but the recovery over there was pretty stark and pretty steep. So yes, that's the way how the markets are looking like at this point in time. Vinny, no doubt Monday blues kicking in for Indian markets as of now.
Okay, Monday blues kicking in there, but let's bring on board our technical analyst for today. We have Vinay Rajani, while from the research team we have Ashesha as well as Ankita joining in with us to talk about a whole host of stocks that have been buzzing in trade, moving in trade on the back of news flows as well as on the charts as well. Let's move on and talk about the first stock, and I'm going to talk about the wires and cable segment. Overall as a whole as what we're keeping an eye out on. Why is that so? Because Motilal Oswal has initiated coverage on the wire and cable segment. They are saying that, they are initiating coverage on Polycab, KEI Industries as well as our cable. And this is because overall they are saying that Polycab has initiated coverage by rating target price of 7,500. They believe an upside return potential of 42% that one could watch out for the stock. KEI Industries is another one that they're keeping an eye out on. Buy, and they believe a 26% upside, though KEI is today a bit subdued given that the market conditions are subdued, as well as RR Cable also is in focus on the back of the same initiation coverage note. Buy rating target price of 2,200, which is a return potential of almost 38 to 40% on the upside. They believe overall there's strong demand that is possible for all these companies. They are proxy plays to how the real estate demand is moving. So yes, if real estate demand starts increasing and improving, we will see all these segments doing well. So yes, market share gains is something that could drive the growth for the company. Other than that, in terms of a momentum to boost the earnings is there in the right place, as well as higher exports is something that we could watch out for from these companies, and that is why they're positive on this. Buy ratings for all the three is what is coming in, though the stocks are a bit subdued in trade.
All right, let's move on. Then let's talk about ONGC. Vinay, in a short while from now, we will have our team talk about why fundamentally ONGC is a buzz in trade. But on the technical front, how is ONGC looking to you? Do you think that this sort of a rally or a momentum that this particular counter has actually been on will continue going ahead?
Yeah, so thanks for having me on the show. So ONGC has surged more than 6% today, and volumes are quite significant. So if price is rising and volumes are also increasing, that confirms the uptrend. And primary trend was already up. It was forming higher tops, higher bottoms, and every supply was getting absorbed at the lower level. And recently we have seen that 50 days exponential moving average, which is placed around 261, has acted as a reversal point for the stock like ONGC. So every dip, a 50-day EMA acting as a strong support, and this time also it has happened like that. And stock is on the verge of surpassing the all-time high. The all-time high for the stock is placed around 285. The current price is 282. So there is higher probability that it will surpass that level and will continue to be there in the uptrend. Not because only stock ONGC, but entire this oil exploration sector has been doing good. Oil and gas sector has been doing good. So Petronet, ONGC, Oil India, and the GAIL, these all stocks are performing very well, and they are outperforming the overall benchmark indices. So I believe that there is a good potential in the stock, and this trend should continue on the upside. As far as support is concerned, as I said, 261 is a positional support for the ONGC, and unless that is breached decisively on closing basis, the trend would remain up in the stock like ONGC.
All right, so that's the view coming in on ONGC. let's talk about then the gas distribution companies which are on an up move in today's trading session. And one of the reasons why is because you had the BJP announce its manifesto, and in the manifesto they mentioned that they will extend the pipe natural gas networks to all major cities and towns. So on back of that particular promise coming in, poll promise coming in the BJP manifesto, you saw IGL see an uptick of as much as 5.6% on intraday basis. You saw Mahanagar Gas also see an uptick of about 3.3%. GAIL, Petronet also seeing an up move for GAIL and Petronet. You also have the power move also coming in. That's actually aiding the stock. You have a brokerage note that's come in from Phillip Capital. They're saying that the move will also have a positive bearing on consumption, therefore the import of the natural gas in the country, and they're also seeing incremental revenue for gas importers in addition to city gas distribution companies on back of the poll promise coming in from BJP. So on back of that, you can see the stocks actually seeing a good up move, still holding on to good gains.
Still holding on to good gains. Let's move on and talk about another stock that has been holding on to very good gains since the last 6 months as well, and that is HEG. When you're looking at HEG, last 6 months around a 40% return is what it's managed to give. What's the view on HEG now? Do you expect a further more upside? Where do we see it headed?
Yeah, so this is the second consecutive month of rising, and if you were to look at the returns in the month till date, in the April month, just 15 days has gone and some sessions have passed. The stock has already given return of more than 33%. So the price is showing a breakout, and 2000 was the previous resistance that was taken out decisively, and after that we see continuous follow buying coming in, and in the times when we were passing through the correction, this stock has shown great amount of resilience, and the trend is still continuing. So overall, it is indirectly related to metal space also. So metal as a index and sector has been doing good, and HEG is also looking very strong on the chart. And if you compare it with the graphite industry, which usually moves together, a relative strength of HEG looks much higher. So HEG is looking very strong, and 2000 resistance is surpassed. As far as short-term support is concerned, I think there is a strong support around 2250. So with keeping that stop loss in mind, one can continue to hold on to the long positions, and existing long positions can be held with a trailing stop loss strategy. That would be better. So no doubt in last 2 months it has risen a lot, but with the trailing stop loss, one can continue to hold, and we can expect this stock to surpass the previous swing highs, which are beyond 3000 also. So the good development, a good sector to be in, and I think this stock will continue to remain resilient and will continue its outperformance.
All right, so that is all about HEG then. Let's talk about TCS. Ashesha came out with his numbers. You had the management talk about it, and if you look at the stock at open, it did absolutely nothing. In fact, the pre-open rate had actually TCS rate has unchanged. What exactly happened?
Well, yes, in fact, the numbers were well ahead of what the street was working with. Margins came in as a surprise. They came in at 26.2%. Versus 25% that the company had reported in the previous quarter. Deal wins too were very strong at 13.2 billion US dollars versus expectations of about 6 to 8 million dollars. IT services attrition meanwhile continues to cool down. It came in at 12.5% for the quarter gone by on a 12-month trailing basis. Growth this time was led by manufacturing. CLSA meanwhile has come out with a note where they say that the strong order book position is not enough to drive management optimism from here on. So they've gone ahead and lowered their target price from 4,043 rupees per share to 3,941. They've also gone ahead and cut their EPS estimates. Goldman Sachs meanwhile is retaining its buy stance on the stock. We also had the management earlier in the day where they believe that FY25 will be much better than FY24. They believe growth is now bottoming out, and clients continue to be cautious with respect to discretionary spends, but all in all the stance was positive. Numbers were also good, but in line with the broader markets, the stock was trading in the red earlier in the day.
Okay, let's move on and talk about some of these EMS names, and why are the EMS players in focus today? Ankita, what's the reason for them that you're picking it out today?
Well, yes, the EMS names are in focus today on the back of a brokerage note by Kotak. Kotak has initiated coverage in a couple of them. They see large opportunities and multiple tailwinds in the sector. The TAM for the Indian EMS market will reach 221 billion US dollars, which is approximately 9% of CAGR in FY 2023 to 40 estimates. Now, the government policy is likely to be the key enabler for growth for the sector. even though the expensive valuations could limit any meaningful play in this sector. We have been hearing by brokerages time and again that even though there is a lot of tailwind in this sector, the valuations are rather punchy, and they have initiated coverage on Canes with a target price of 2,850 rupees, and Amber with a target price of 4,000 rupees with ad rating. They have also initiated rating on Sirma with a reduced rating and with a target price of 500 rupees, and they maintain their sell on Dixon with a target price of 5,200 rupees. And we can see, the selling pressure coming in on all the EMS names. Canes is trading with cuts of 0.2%. Sirma also trading down 1%, and Dixon Tech is down 2% in trade today.
All right, so staying with the note that actually Ankita has highlighted, let's also talk about Cyient DLM as well as Avalon Tech, because both of them have been initiated. They've initiated coverage on both of these counters, Avalon Tech as well as Cyient DLM. And with for Cyient DLM, actually they've gone ahead with a target price of around 570 rupees per share, I believe, if you look at it. And also if you look at what Avalon Tech, also they've initiated a coverage with a sell rating. So both of these counters, they have actually come out with a sell rating, apart from the additions that actually Ankita spoke about. If you look at for Cyient DLM, they're saying DCF based fair value is above 550 rupees per share, while for Avalon Tech they are saying DCF based fair value is around 400 rupees per share. So apart from those counters, even these are under pressure in trade today, Vinny.
Absolutely. So we're keeping an eye out on all these EMS players today, all of them in focus, and Cyient DLM, Avalon Tech, you can see, are a bit subdued in trade. But a stock that has been glittering, and Cheryl, that's no doubt Senco Gold, because when you're comparing it with its peers also, it's managed to see very good growth in terms of Q4 update, that what we're seeing. While Titan said 17% total sales growth, Kalyan Jewellers said around 34% growth, Senco managed to say a 39 and report a 39% growth in terms of a year-on-year basis for Q4. Other than that, their store additions have been strong. Their SSSG growth, they said, for FY23, FY24 was at around 19%. Started ratio 11.4% is what they'd highlighted. And they've managed to add decent number of stores. 23 stores is what they launched for FY24. On a net basis, that's also a good growth in terms of double-digit growth in terms of the stores. And today, when you're looking at the stock, 17% uptick there. It's trading at an intraday high. Record levels is what it managed to touch as well. As much as 20% at one point of time it was up. There was almost what we saw. This is the first time since July 14th when the company actually listed. So new listing, they focus more on the East India side, but a strong growth is what they managed to report this time.
All right, let's move on. Let's shift gears altogether from a mid-cap to a large cap. And in fact, let's talk about large cap private sector bank, and that is ICICI Bank. Vinay, how is this one looking on the charts to you? No doubt this one is being featuring on the list of the techies more often than not.
Yeah, definitely. So kind of one kind of whipsaw we can see on the chart. So till now, till last week, this stock was holding strength on the chart, but today we have seen that it is underperforming and it is down by 2%. So entire sector is weak today, and the ICICI Bank is taking lead on that. So no doubt it is down, but we can say it is down but not out, because if you were to look at the last 7 to 8 weeks, it is into a consolidation on the lower side. There is a strong support between 1060 is a strong support, on the higher side 1120 is. So in 60-70 rupees range, the stock is moving it for last 7 to 8 weeks. So we can say positional trend is into consolidation. There is a strong support between 1050 to 1060. So again, once we see this stock reaching that level, there could be a scenario when it could again bounce back and try to attempt the hitting new all-time high. So overall trend is still positive. Short-term trend is into consolidation. 1050, 1060 is a strong support. So one should wait for that level to come. Once that level comes, we need to see whether it is taking support or not. And at that, on that basis, we will take a call. But I would rather say one line on this stock. The stock is today down, but it is not out. And 1050 is a very strong support.
Okay, keeping an eye out on those levels over there for ICICI Bank. Let's move on, talk about aluminium stocks, Shesha. All of them in focus. And why is that so? They have been in focus for some time now.
Well, absolutely. And today in particular, they are in focus, and that is because London Metal Exchange has gone ahead and banned Russian metal on account of the sanctions that have been imposed by US and UK, and hence we have aluminium stocks the likes of Hindalco, Nalco, Vedanta gaining nearly half to 3% in today's trading session. Remember, some analysts believe that it could lead to undersupply in the market, because of which prices on London Metal Exchange have been rising, and hence we are seeing that impact coming in on Indian aluminium stocks as well. But there are some other analysts who believe that this could probably lead to increase in supply, because this rule is applicable only for production that is done after 13th of April. This could probably flood the market with Russian metal, because of which it could lead to oversupply in the market. In fact, Goldman Sachs came out with a report a couple of hours ago which believes that probably the impact of this could be limited, and the commodity prices will start cooling off anytime soon. But now, because of the surge in aluminium prices that we are seeing on London Metal Exchange, we have all these three counters gaining in trade today.
All right, let's move on, and Ankita, let's put the spotlight on Motilal Oswal. And why is this one in focus?
Well, yes, it is in focus today on the back of the fact that the board is likely to meet on the 16th, which is tomorrow, to mull fundraising via debentures aggregating to 1,000 crore rupees. In fact, the board will be mulling over the public issuance of secured, rated, listed, redeemable, non-convertible debentures with a face value of 1,000 rupees each for an amount aggregating up to 500 crore rupees. That's the base issue size, with an option to retain oversubscription of up to 500 crore rupees. That's the green shoe option, aggregating to up to 10 lakh NCDs, which is amounting to 1,000 crore rupees. And on the back of this, we did see, in fact, the stock was down a good 4%, sharp knockdown coming in the early trade today, but it has recovered from the day's lowest point and inching towards the day's highest point. It is trading with cuts of 1% right now.
All right, let's move on. In fact, not let's move on, let's rewind and go back. Let's talk about the aluminium stocks, and Vinay, while you had Ashesha outline what's exactly happening globally, why the counters are in focus today, but Hindalco particularly on the charts, how is it looking? No doubt this time the move also has to be contributed due to what is happening globally in the commodities market, isn't it? But do you see that sort of a move or this spike continuing for Hindalco going ahead? Vinay, you will need to unmute your mic.
Yeah, sorry. So Hindalco is looking strong, and we should remain with the trend, and trend is clearly on the upside. I can see an immediate resistance around 620 odd level, which happens to be the previous swing high, which was made in the month of January 2024. So we have to see whether this level is taken out on the closing basis or not. But the existing trend is bullish. The entire sector is doing well. Aluminium stocks are doing well, and PSU segment is also doing good. PSU metal stocks are also performing well, like SAIL and Nalco. But Hindalco is looking strong definitely, and we should remain with the. I don't find any reason to exit from the long position. So as of now, the strategy should be to hold on to decide one stop loss and hold on to the long position as far as short-term trading is concerned. And I see a strong support around 590 for the traders. So until and unless we see level below 590, the long should be held, and the trend is clearly on the upside.
Okay, let's move on, talk about Exide then. Exide is a stock that has been in focus for a while now, and then that up move is not stopping for Exide. Now, yes, today also we have a brokerage note that's come in on Exide. Morgan Stanley is maintaining their overweight rating target price, and they've hiked the target price actually to 485 from previous target price of 373 rupees per share. Leading battery player that is emerging there, surely a lot of benefits and possibilities of the EV play that work out well for Exide Industries. Their share price also had significantly risen is expected to rise over the next 10 years. That's what Morgan Stanley is saying. And other than that, government support on Make in India EV, the strong focus in terms of auto conversion towards the EV side, the customer tie-ups, tech tie-ups, and overall more advantages is something that could play out in favor of Exide Industries, and that is why today the stock is buzzing away in trade, 4% uptick as of now. Also, let's not forget that they do have multi-year contracts with Hyundai, Kia as well, so that also shows the capability of the company to grow forward. The scale-up phase is there for all the battery stocks, and obviously Exide is one of the players that will be benefiting from this. And Morgan Stanley says that Exide could nearly double in the next 12 years, so let's keep an eye on that. Stock also seeing a very strong up move today.
All right, that is exciting for you. That has been on the firm footing. But let's talk about Infosys then, Vinay. And how is this one looking on the charts to you? No doubt we spoke about TCS reacting to the earnings. Infosys not done much in the last few months. And ahead of the earnings, do you think this one is a stock that one can look at?
Yeah, so in the month of February, we saw that stock hit a swing high of 1733 and now it is trading around 1460. So almost 300 rupees, 280 rupees kind of correction we have already witnessed in the stock like Infosys. It's a large cap IT stock and recently, technically, we have seen that some development was there. It has breached a crucial support of its 200 days exponential moving average. So whenever the large cap stock breaks this long-term moving average, it is a cause of concern. But we need to see because as we are marching towards the results and many large cap IT companies are headed coming out with quarterly numbers, things could change there. But we already seen a good correction. Existing trend is on the downside. The recent the 200 days EMA which was broken recently, now it can act as a strong resistance for the stock. So precisely 200 days EMA is placed around 1510 odd level. So that will act as a strong resistance. So once we see the Infosys closing above 1510, then things could change for the counter. But otherwise, till then, the trend would remain on the downside and on the bearish side. The support I see for the Infosys immediately is around 1400 odd levels. So that should be tracked for the short-term traders. So overall, existing trend is down. Healthy correction is already there. And 1510 is a strong resistance above which the trend could change. But till then, we can say it is into a downtrend.
All right, let's move on. Let's talk about Aster DM then, and that particular counter has been on a rip-roaring rally. If you see the way how the stock has been performing over the last couple of months or so, the stock has hit actually an all-time high once again in trade today. 14% uptick is what it logged at one point in time, and this after declaring a special dividend payout after the sale of its Gulf operations. So they have actually announced a special dividend of around 180 rupees per share, with the payment to be made within the next 30 days is what the company has said. They've set April 23rd as a record date for determining entitlement of shareholders to the special dividend. And on back of the hefty dividend coming in from Aster DM, the dividend, a special dividend of around 118 rupees per share, the stock is seeing a good up move, now holding on to gains of about 8% or so.
Okay, surely keeping an eye out on Aster DM. Let's move on. Talk about Reliance. Vinay, Reliance is making the list. What is the view and what is the chart now indicating for Reliance Industries? At 2,954, does it merit a buy call or would you wait for some time?
Yeah, so it's a good candidate for going long because it has shown a great amount of resilience, and as we have been talking about the overall movement of the oil exploration company, so this stock is one of the stock which is taking strong support at the 50 days EMA. So this is another example where 50 days EMA is acting as a strong support. So nice reversal from the morning's low, and overall trend for last 7-8 session has been consolidation. I can see there is a strong resistance around 3000 odd level. So for getting confirmation of a fresh breakout, we need to wait for the breakout above 3000. No doubt the overall setup is quite convincing, but we have to see the market condition also. And as far as the stock is concerned, I would rather wait for the 3000 level to be taken out on the upside. Once that is taken out, then definitely long trades can be taken. As of now, wait and watch strategy should be there. So from the oil and gas space, the ONGC and GAIL India looks better than Reliance as of now. So if somebody wants to take fresh long position at this point of time, I see good trading setup on the ONGC and the stock like GAIL. But Reliance is a wait and watch, and above 3000 it will be a fresh breakout.
All right, so that's the view coming in on Reliance Industries. Ashesha, coming to you. We already spoke about Motilal Oswal, why that particular counter was in focus, but why is Anand Rathi in focus today and seeing actually a sharp up move?
Well, absolutely. It is on the back of its results that it reported. In fact, the stock was trading in the red earlier in the day when it started off, but now has recovered significantly from the lowest point of the day, trading with gains of nearly 4.5% as we speak. Revenues have been flat on a quarter-on-quarter basis. Margins have contracted a tad bit. They've come in at 40% versus 44% that the company had reported in the previous quarter. And margins have come in lower on account of higher employee and other expenses. Apart from this, the company has also approved buyback to the tune of 160 365 crores, which is priced at 4,450 rupees per share, a discount of 10% as compared to Friday's closing price. Company has also given its guidance for full year FY25. Remember, for FY24, it was able to meet its guidance across parameters. And now for FY25, they've given a revenue guidance of 910 crores, PAT guidance of 280 crores, and AUM guidance of 72,000 crores. A very positive set of numbers, and the guidance for FY25 is also very promising, because of which the stock is gaining over 4.5% today.
Surely keeping an eye on that for Anand Rathi Wealth. We also managed to speak to the management. They also given very positive commentary for the outlook going forward. So that's something interesting that we should keep an eye on in terms of growth of the AUM as well. Let's move on. Talk about Ami Organics then. Ankita, why have you picked out this one for us today? What's the news flow?
Well, yes, Ami Organics, we can see it trading with an uptick of 2%. Well, this specialty chemical makers, said that it plans to raise 500 crore rupees through a QIP. Well, the company's board of directors have approved the proposal for fundraising in one or more tranches by issuing equity shares, of convertible securities. According to the approval proposal, Ami Organics aims to raise an aggregate amount of not exceeding 500 crore rupees through the issuance of equity shares with a face value of rupees 10 each, or other convertible instruments such as fully convertible debentures, preference shares, or any other security convertible into equity shares. Now, the fundraising will be conducted in compliance with, of course, the SEBI regulations of 2018 and other applicable laws. And on the back of this fundraise news that's coming in for Ami Organics, is seeing an uptick of 2% on the stock.
All right, let's move on then. Vinay, let's talk about HUL, a stock that barely or rarely we've seen anybody be positive about, because the moment we are positive about the stock does absolutely nothing. And now look at the stock in the last 6 months, given only, or rather it's fallen about 14%. What's your take coming in on HUL?
Yeah, so for last 4 or 5 months, we have seen a healthy correction, and almost 500 rupees correction we have witnessed in the stock. Stock is trading below its 20, 50, 100 and 200 days average. The stock, the overall setup, the lower top, lower bottoms are there. So everything technically looks weak, looks on the bearish side for the counter. But as we have seen a healthy correction, and it has been so long, and now oscillators have turned oversold, and now we have entered into a result season. So many of the times we have seen that the stock which has already corrected 15% from the high, and if it is a part of Nifty index or top 100 index, so there are good chances that the trend could reverse, and so this is not the time to take a bearish fall as of now. It looks oversold, and 2100 seems to be very strong support, and stock looks oversold on the short to medium term chart. So better not to take a fresh short position in this counter. Rather, we should wait for some stable consolidation, and if stock crosses its short term moving average, then we can take a long call also. So wait and watch kind of strategy. This is not the time to take a bearish call as of now. Could be a 50, 100 rupees downside, could be there, but at that level, I think it will become attractive on the charts.
Okay, keeping an eye out on that level over there. But let's, on that note, actually slip into a very short break. Don't go anywhere. We'll be back with more stocks after the break.
If you like this video, then like, share and subscribe to ET Now.